in this quarter. Well, with both Tech Mahindra and Wipro announcing their numbers today, the IT big boys have now all announced their third quarter earnings. So how exactly did they fare? Reema Tendulkar joins us with a quick wrap of all the IT earnings this quarter.
Large cap IT earnings are in, and as a quick recap, TCS, Wipro, Tech Mahindra beat expectation. HCLTech was a miss on elevated expectations, while Infosys, the headline numbers look good, but the internals were a bit disappointing. Now let's get to the numbers. In terms of growth, the real revenue growth on a quarter-on-quarter basis, HCLTech was a miss, but again, the expectations were higher, but the company's growth at 3.8% was on top of the pack on the back of seasonality in its products business. Wipro was anticipated to report a negative growth, so they managed to report a positive growth. TCS on expected lines was a flat performance. For Infosys, it was a 1.7% growth, but again, aided by certain pass-through elements, which are not sustainable in the next quarter. In terms of margins, we've largely seen an improvement in margins across the board, and it was positive to see companies like HCLTech companies like Wipro absorb the wage hike impact and still report a margin expansion of 70 basis points. So, Wipro's margins positively surprised the street. Even Tech Mahindra has been on a margin expansion streak. That said, TCS's EBIT margins in absolute terms continue to remain right on top of the pack at 24.5%. The headcount picture has been a bit mixed. So TCS and Wipro reported a decline in their headcount, while Infosys and HCLTech reported an expansion in their overall headcount. Attrition for the companies have been inching up. For across-the-board IT services companies, attrition has been higher for the last second or third consecutive quarter. It's still at very comfortable levels. So for TCS, it's at 13.5%, Infosys is at 13.7%. But the trend here to monitor is that it's been slowly inching up. So for TCS, this is the second consecutive quarter of an increase in attrition. Attrition 2 quarters ago was 12.1%. For Infosys, 3 quarters ago, attrition was at 12.6%. So companies are not worried at all about attrition, and maybe it's seen as a positive sign that there are greener pastures, demand is picking up. Deal wins for the company, I think over here it's TCS which stands out. TCS reported a very strong deal win above $10 billion. For TCS, the deal wins at $10 billion includes new plus renewal, but it was a very strong performance for TCS this time. And the management commentary, which is forward-looking indicators are also positive. Companies are talking about discretionary demand being better than 3 months ago. Companies like TCS are talking about FY26 being better than FY25, and across the board, BFSI as a sector continues to see recovery, and companies seem to be confident about the recovery and momentum in BFSI sustaining.
Right, Reema, thanks a lot for that. Now, from the IT to the auto space, Prime Minister